Hi, folks. Welcome to the Weekend Investing Stock Market Weekly Review. Week ending 18th of July. Not a great week, but we'll go through the charts in a bit. From our research desk this week, we did stories on why small caps in the US are falling behind large caps, why 91% FNO traders are losing money, why buying at all time highs is not a bad idea, three simple habits that scale your investing journey, why rising Japanese bonds yields could impact global markets, why stock markets often fall after strong growth, why gold remains a strong long term investment across different currencies, how big are global markets compared to India, why growing concentration in US markets could be a risk for investors, and why having market exposure is key for long term growth. All this and much more on the Weekend Investing app, in the Weekend Investing newsletter, on the Weekend Investing blog. So you can read and get to these stories in many different ways. Disclaimer as always, please read it fully, do understand it, and only then proceed in this video. And if you are proceeding, please do subscribe to the channel. We really need your encouragement. Nifty this week 0.72% down. You can see that all basically out of 5 days we had two uptick days but three down days, and we are back in this congestion zone that was there since May. On the weekly chart, it is more evident that this breakout week that we had 4 weeks back has been completely nullified, and we are back to this zone 24,500, where we had found support thrice in the last couple of months, is where the biggest support is now available. S&P 500, on the other hand, continues to make strong moves, 0.59% up, and hitting a new all-time high close on the mother market. So while there is all kinds of concerns about the US market continues to do well. The US dollar index also was doing well this week, and that probably is one reason where emerging markets and INR gold was not doing so well. INR gold up quarter percent this week, 98.31 rupees per gram is where we ended at. It is not a bad price actually, given the fact that after this stupendous rally, you can just see here on the chart, just last March, we were at 5,700 and we are already at 9,800 in about 15 months. So the rally has been stupendous, and despite the stupendous rally, there is no downward correction happening as such. It's a sideways correction that is happening, which is a very high probability event that a further high is going to happen. Whenever markets don't correct like this one, it is a sideways correction, right? This was a slightly downward correction, but still mostly sideways. So bull markets will not give you very steep down moves if the rally is very strong. Dollar index was going up this week, but has been cut off on the last day, but still up 0.16%. Overall, the structure remains weak for the dollar index. Benchmark index returns for the last 1 week. Nifty down 0.72%, Nifty 500 flat, Nifty next 50 also flattish 0.38%, mid caps and small caps making 1.5% gain. So nothing really moving this week. Uh, the largest mover in sectors is real estate this week, 3.8%, media up 3.9%, and capital markets 3.3%. The biggest loser this week was defense at minus 4.1%, and private banks at minus 1.9%, and IT stocks at minus 1.5%. On the momentum score table, we can see capital market remains in the top league, followed by PSU banks, followed by tourism, metals, pharma, and so on. The bottom part of the table is IT, public sector enterprise, central public sector enterprise, energy, services sector, and FMCG. What can be seen is that defense has suddenly lost momentum within the last 1 week and 1 month, while real estate in the last 1 week has picked up very nicely, and also autos have started to pick up nicely in the last 1 week. On the weekly advanced decline stats, you can see if you see the declines, Nifty had 60% stocks declining, Nifty next 50 also 56% stocks declining. So easily you can see that larger caps were declining more than the mid and small caps, where you advances were much more. So there was definitely pressure from large caps, likely FI sales, more than what domestic investors were selling. In the percentage of stocks outperforming the benchmarks, you can see here 56% stocks outperformed the benchmark this week on Nifty, and the Nifty next 50 mid cap and small caps was very poor, less than 40% actually, and CNX 500 was at 52%. So this week was in contrast to perhaps let's say over a whole year where you were more nearer to 45% kind of move. But over 1 year also you can see Nifty 50 is only 38% stocks have outperformed the benchmark. So moves are more concentrated than broad based, basically across different sectors. In the market cap segment wise drop from 52-week high, there has not been much change. There are about how much is this 74% stocks which are in the top 20% drop from the top for Nifty 50. But as we come down, that number swells to the same figure being in 10 to 30% and some even 10 to 40%. So Nifty next 50 as well as mid cap as well as small cap as well as micro cap, more than 75% of the stocks are 10 to 40% down. So the breadth of the market, the larger piece of the market is still bleeding very, very uh, heavily, while the index numbers are not suggesting so. So there is a big gap between what the index is suggesting and what actually is happening in under the actual performance. In the 200 DMA test of how many stocks of CNX 500 in percentage terms are above 200 DMA, only 58% stocks are above 200 DMA, and that number has stagnated. Above 50 DMA, about 78%, that has also stagnated since May. So market is not really picking up. It is in fact sort of going sideways. Trend check in sectors, if we see the 200 DMA, again, you'll see financial services, metals, private banks, commodities, PSU banks. These have some significant number of stocks above the 200 DMA. CNX 500 itself is only 58%. So 42% stocks are below the 200 DMA. And just look at some of these big sectors like IT, public sector enterprise, real estate, oil and gas, autos, where not even 45% stocks are above the 200 DMA. So the overall health is reasonably circumspect, although the index is very near its all-time high. FII stats for the week, I mean, either they were selling big or they were sort of flat. There was no big buying from FIIs this week. DIIs were buying nicely for all 5 days, almost 2,000 crores plus on most of those days. So FIIs continue to be quiet, I would say, and DIIs continue to accumulate. In the last 1 month now, FIIs have sold 2,000 crores, which is not a big figure actually. And DIIs have bought 44,000 crores. So just very polarized, different trends in both these dynamics. So uh, usually when FIIs will join the buying rush is when the markets really take off. But market has done reasonably well in terms of the index numbers, despite their selling stance. So that's the end of this week's weekly report. I hope you liked the content. Do share your comments. Do let us know what you did not like in this report or what you would like us to add in this report. Your feedback will really help us improve. And also, please do share these videos with your friends and family. Thank you. See you next week. Bye.